Hello, good afternoon. Hello, can you hear me?
Good afternoon,
Yes,
sir.
sir. Yes.
Right, very good. Okay, let me go to the tute number 2 last week. We'll try to summarize what we discussed last week. We started at this point showing you the forces, Michael Porter's five forces theory. Okay. What are the five forces of Michael Porter? Can you all remember the forces? Who is Michael Porter anyway? Hello? Who is Michael Porter? Who was he? Who is he? He's still living, right? Who is Michael Porter? A marketer or lecturer or professor? Or marketing guru or management guru? Hello? Give answers. Hello? Please give your answers in the chat box. Professor, yes? Professor where? Professor at Harvard University, USA. Right. What are the five forces? Name the five forces. Quickly. Come on, guys. We are refreshing the previous week tutes. You have the answers in the tutes anyway. But I want you to write it so that you can remember. Start giving the answers. What are the five forces? Competition. No. Threat of new entrants. Yes, that's one. Rivalry among existing competitors. Yes. Rivalry among existing competitors. Yes. There are more. Bargaining power of buyers. Yes. Good. Adivya said three. Bargaining power of suppliers. Yes. Some more. I think one more. One more to come. Quickly. You said threat of new entrants, bargaining power of buyers. Yes, threat of substitute products. Okay. So tell me, what is rivalry among the existing companies? If you put that, apply this to banking industry, what do you mean by the rivalry among the existing companies? What is the? How do you explain the rivalry? How many commercial banks in Sri Lanka? Hello? How many commercial banks in Sri Lanka? Roughly. There are foreign banks, there are local banks, state banks. Roughly how many? 25. Yes, around that. Around that. I will give you the exact number in a while. So how many finance companies in Sri Lanka? How many finance companies in Sri Lanka? Any idea? 23. More than that? Much more than that. 84 for not 84. It may be around, yes, 47. Around 47. Exact number, I will ask you to go to central bank website. You can get a list of banks, finance companies, and even a list of leasing companies. Okay. What do you mean by threat of substitutes? Just give a simple answer. What is the threat of substitute for banks? How do you explain that? Sakriti. No more now. But it would have been, yes. Easy cash, yes, of course. There are direct substitutes. Maybe easy cash is an indirect substitute. Mobile cash or M cash, easy cash. Undial, Undial Hawala. Yes, very much. Microfinance company, yes. Very good. Some more. There are direct substitutes. They are competing banks with head-on. You know the answer. Hmm? What about the finance companies? Registered finance companies, yeah, insurance companies, yes. Right. Then how do you explain the bargaining power of suppliers? Because that is impacting our business or impacting our profitability. Who are the suppliers for banks? I mean the key suppliers, core, main suppliers. For a bank, there can be many suppliers. Well, what is the bank? What is the product or what is the good bank is dealing with primarily? Or what is the commodity the bank is dealing with primarily? We are dealing with what? Banks are dealing with? Come on, guys. Day-to-day deposits and yes, deposits and loans, yes. So what they come in the form of what? form of funds. Basically, we are mobilizing funds and lending funds. That's our core business. So who are the suppliers? Who is providing funds? Who's supporting us to mobilize funds? Depositors.
Depositors.
Depositors, yes. Right? So depositors are, so so now basically Porter says in a competitive environment, if the the bargaining power of suppliers are high, what happens? If the bargaining power is high, what will happen to us? What would be the impact to us? If the customers can bargain, if the bargaining power is high, what is going to happen? Demand, exactly, perfect, superb. They can demand high interest. If we don't offer high interest, what will happen? They will not deposit with us. So they have a choice. They can go to some other reliable organization or institution that accept money and give them a higher return. Okay, so what is the bargaining power of buyers? Who are the buyers? Now you know the answer now. Who are the buyers? Who are buyers? Who are our buyers? Come on, quickly. Because I want you to understand these 5 forces. Yes. Perfect. Borrowers. Our loan customers are the. So if their bargaining power is more higher, what will happen? So what would be the impact to us? If they can bargain, if they have more choices, then what will happen? Demand low interest, perfect. Demand low interest. Then what will happen? Our profitability may be affected. You know, how do we make profit? The profit is the gap we maintain between the cost of funds and the average lending rate, which we call net interest margin, NIM. So you cannot maintain a good NIM or net interest margin if you have to pay higher rate of interest to the deposits, or at the same time give loans at a lower rate. So these can impact direct. Threat of new entrants, you think we have that threat also, the banks at the moment? To take the whole banking industry? Yes or no? Do you have a threat of new entrants? Come on, quickly. Yes or no at least? Yes or no? So threat of new entrants for a bank can be a new bank coming into the industry, total new bank. Oh, that's a story that LOLC is going to become they have asked for license for commercial banking operation. So there's a threat. The LOLC come to the banking industry. There can be a threat. At the same time, there can be new foreign banks come into the picture. At the same time, if you are a branch located in a particular city, say at the moment you have 5 branches of different banks in the city. But now, very near future, there are going to be another 2 new branches of another 2 banks going to open in your city, in your area. Then what will happen? So then there's a threat because they will grab part of your business. They will attract part of your customer base. Isn't it? So that's so you can apply. You have to understand the forces that are impacting on your banking business also. So there's definitely a good application of Michael Porter's 5 forces into banking industry as well. When these forces have more power, when buying power is very high, if you take any other industry, say other than banking, say if you are a manufacturer of say for some product, I gave you some example last week, right? Now, milk powder manufacturer, if the milk suppliers are demanding high prices, what will happen? There's impact on the milk powder manufacturer because their raw material cost is going to be higher. Then what will happen? Their cost of production is going to increase. So because they have no control over the supply chain. At the same time, if they don't have a proper distribution mechanism, they have no control over their distribution mechanism, what will happen? You have to pay a higher distribution cost, bear a higher distribution cost. So that again impact your profitability. So therefore, organizations today or in the present context use some strategies which I explained last week, which are called integration strategies. So I explained to you about the vertical integrations as well as horizontal integration. Right. So tell me what is vertical integration in your understanding? What is vertical integration? How do you explain? If you get a question in the exam, explain briefly what is vertical integration. How do you answer? Give me simple answers with your understanding. You should be able to answer that. What is vertical integration? I explained a lot last week and I give some examples. Come on, guys. You should remember. I give some examples. The benefit of vertical integration, how it is done, how it is happening in the marketplace today. It is happening not only in Sri Lanka, it's happening regionally, it happens in globally. Vertical integration. Just give a try. Quickly, come on. Answer. How do you explain briefly the word vertical integration? Come on, guys. No, ladies are silent. Come on. What is, I just want a simple answer. What is, in say for 3-4 words, what is vertical integration? How do you understand? How do you remember it? Why don't you give an example, which I gave you last week? An example for a vertical integration. an example for a vertical integration? Quickly, I want the answer. Without the answer, I won't proceed. Because it's a very simple question that I'm asking you. Come on, come on, come on. Can't proceed without your answers. Simply say what is vertical integration in 3-4 words. Two businesses at different stages of supply chain joined together. Perfect. Yes. So what is supply chain? There are raw materials, there's a manufacturing process, there's finished products, then there's a distribution or selling process, right? So two organizations in the value chain getting together. By doing that, that particular organization will have better control or more control, because when your supplier has a more bargaining power, then your production cost can increase. So when you have a control, once you have acquired that supplier, the advantage is you will have the full control, and you manage it, and your supply chain and supply lines will be cheaper than in a situation where you don't have a control. So with the vertical integration, you will have a high control over the value chain. I told you example, Keel's meatballs, and they didn't have a control over the distribution line. So they started or set up a new distribution. So that is also not only acquiring, even setting up a new distribution line is also vertical integration. The Keel Super, right? They've been buying ice cream from Walls, and they went and purchased. Sorry, that is actually not Keel's. That is Food City. Food City, earlier the Walls ice cream was a supplier, but subsequently Food City bought Walls ice cream factory, and Walls became Cargill's Magic. And I give another example. There are hundreds of examples in the industry. I give another example. A milk powder manufacturer, the Lux Spray, they were buying raw milk or fresh milk from Ambevela farm, and at a point, Lux Spray thought we'll have better control if we buy the farm, which will be in our same umbrella of companies, and they went and bought Ambevela farm, and that was Ambevela farm. That was a huge success because their production cost, they could reduce more and more because they had better control over their main supply line or supply chain, right? So if you look at the industry, you can find hundreds of examples like that to understand vertical integration. Vertical integration gives you a better control over your supply chain. A manufacturer can both the raw material supplier and also can buy a distribution line. Say Laughs, remember the Laugh supermarket, and they Laugh earlier was a gas distributor or gas manufacturer. They went and started gas stations. The manufacturer becoming a distributor. So now they produce gas, they complete the finished product and sell those gas cylinders in their own locations. Okay. Then what is horizontal integration? So what we discussed was vertical integration. So what is, I said another term, horizontal integration. What is horizontal? I give you an example also. Horizontal, I give you a good example. At least give me that example, then at least you will know. Remember in the exams, acquisition of related business, yes, related business. Companies who are in similar business or similar type of business can be acquired or can be merged to become a huge organization or a conglomerate, you call it. And what will happen? Then you can be the market leader in that particular business or particular industry. Now look at Sri Lankan tile industry with the market leader. The market leader in Sri Lankan tile industry. You should know as bankers this. With the person who owns the say 70 to 80% of tile market in Sri Lanka. You know, tile used for housing construction. With the owner of the tile conglomerate, yes, right. So through Royal Ceramic, he owns Lanka Wall Tiles, and Lanka Wall Tiles owns Lanka Tiles, and also Lanka Tiles I think owns Parquet, is aluminium fabrication business. And not only that, even they went and bought Ceylon Ceramic. Right? So virtually, other than there's local manufacturer of tile called Mac Tiles. They may have maybe 10 to 15% market share maximum, but 85 to at least 85% or 80 to 85% of the total market is now owned by Royal Ceramic Group. And take the cable industry Sri Lanka, who is the market leader? Cable. Or the company. With these are all known factors. Who is the market leader in cables? Is for wiring. With the market leader. What is the company? Quickly, guys, you should know. These are household names. What is the market leader in cables? Name the company. A good example of horizontal integration. Come on. Market leader in cables. ACL. Yes. Very good. How have they become market leader? Because they own Kpmg cables too. Kpmg cables and ACL together has more than 70 to 80% of market share. Kpmg cables and ACL are one group or within the same group, right? There are very few. I think they went and bought Kamal cables, and almost small manufacturers of cables were bought over by ACL group. And now I think only Sierra cables or some that is I think owned by Sierra is owned by I think LOLC or something, if I can remember. Sierra group has a smaller market share in terms of cabling. 80 to 90% of the market share is owned by ACL cable. So, you know, the advantage of horizontal integration is you can, once you keep buying same type of business that are in the same or related businesses, you can become, you have the full control over the marketplace or the industry and become a giant in the particular industry. And what is the advantage? Then you can manage your profitability because you can determine price. That's what happened to Sri Lanka. You know, tile market is why the tile price is cable price. They can the Amiga the Lanka Tile Group or ceramic Royal Ceramic Group can continue to increase their price because they have full control. They have full demand over the tile market, full power. And cable also same. They can keep. I think cables increase price number of times over the last few months. Tiles also same. Today price, tomorrow different price. They have become virtually monopolies in these businesses, right? All right. So let's. That was the end of tute number 2. Let's get to the tute number 3. Okay. So tell me, what is marketing or competitor myopia? I said a word called competitor myopia. What do you mean by that? I give an example also. What is competitive myopia? Quickly, guys. Please answer. What is competitive myopia? These are exam questions. Remember, what is competitive myopia and how do you explain that? If you want to understand the competition, you need to know these terms. What is myopia? I know you have not read these notes. At least now you can go through the notes once in your lifetime before the exam. What do you mean by the competitive myopia? Quickly, guys, come on, come on, come on. Answer. I need answers. Few words. Please participate. I can see you all. I want you to participate in this discussion. You run through the notes even. Focus on a competitor. Not complete. Focus on a competitor is not myopia. It's part of the answer. Nearsighted view of competition. Yes, that is close. Try some more. It's close, yes. Come on, come on. Short sightedness without having broad perspective. Yes. Yeah, you're coming to very close. Yes. It's actually short sightedness. What happens is you tend to focus on few things, but you forget the broader picture. You have the short term answers to the competition that is coming in, because you don't have a long term solution. Your company can be affected in a great sense, in a great deal. Uh, you have to understand the competition in a total perspective, right? In a full strategic perspective. Otherwise, you cannot find a solution or find a way to beat the competition. All right. Now, what happened to some industries like film rolls, uh, video, VHS, some cellular phones like analog phones. What happened? Because they saw the competition coming, the new versions of products coming, but they could not change according to. They had short-term solutions, but those solutions didn't last long. Ultimately, the companies had to face severe losses because the demand for their products reduced because the customers were looking for some other functions or features in products. As a result, your products become stale. So the competitive myopia is having a short or narrow sight of or narrow focus on the competition without finding a longer term, long lasting, strategic solution that will continue, that will sustain your business model. You need to change and adapt to the new changes quickly if you have to survive in the industry. So by learning the competition, by understanding or analyzing the competition, you should be able to take these decisions whenever it is needed without being late. Right. So what is benchmarking? I give another word. What is benchmarking? It's another way to sustain the competition. So what is benchmarking? What do you mean by the word benchmarking? You have heard this term? You have heard this enough? What is it? Come on. Answers. I need answers. What is benchmarking? Simple terms. At least try some answers now before the exam. Hello? Making standards? Standards of what? Can you do standards without any clue? Yeah, you are right. You have to set standards, but how do you set standards? How do you set standards? You are partly correct. Come on, quickly. What is benchmark? It's a simple word, very widely used term. You benchmark. So what is benchmark? Setting up targets? No. You might set targets, but no. Why you want the direct answer? What is benchmarking? A very simple answer to explain or define what is benchmarking. It is in your tut. It is in your tutorial. Come on, guys. Is there a way to go through your tutorial once you are in the class? What you can do is you can save the tutorial in another folder. You can while in the class you can run through that folder at least, and don't copy paste. But same time you read the answer, read what is in the tut, and give the answer in your words. Comparing business performance with industry leaders' performance. Yes, there you are. You benchmark with what? You benchmark with the industry leaders. You can always benchmark with the companies which are doing great. You can benchmark with great companies, the best in the industry. You benchmark, and then look at their standards, look at their ratios. I gave you some exercises last week. Remember? So benchmark. What is their growth levels? How much growth they have maintained over the last 3 years in the deposits? What is their deposits growth over the last 3 years, or last 2 years, rather, or last 1 year? Are we able to maintain the same growth? What is their lending growth? What is their profit growth? And also I ask you to look at cost to income ratio. Again, a high, very important productivity ratio. Right? You gave the answer. Cost to income is how much do you spend to earn 100 rupees? You remember that? Cost to income ratio is how much your bank spend to earn 100 rupees, whether your bank spending 30 rupees or 50 rupees or 6 rupees to earn 100 rupees. So banks that earn 100 rupees by spending the lesser amount, the lowest amount, are more efficient, more productive, more capable. And if they can do it, why can't we? That's how you set standards. You benchmark certain ratios and certain growth levels of the industry leader or the industry best or industry best practices can also be benchmarked. Maybe the customer service standards can be benchmarked. I told you now, when McDonald's and KFC came into the picture about years before, the customers were comparing bank service as against the customer service of these multinational companies. Then they felt a huge gap between as to how McDonald's or KFC or Burger King treats their customers and how the bank customers are treated. So there's a huge gap they saw. So banks were able to benchmark the standards of those multinational companies and raise their bars in terms of best practices, in terms of various growth levels, various ratios like cost to income, and so on. Okay, coming back to cost to income, you're able to get some cost income ratios of your banks. Now tell me the bank cost to income ratio. You should have got it now. I asked you to do that exercise last week. What is the cost income ratio of BOC? Hello? Hello, quickly. BOC cost to income. People's Bank cost to income. NSB or say commercial, HNB, Sampath, anyone having in? So come on guys, last week I asked you all to do this. It's just a matter of logging to your website and checking it in the under annual report. So if you are not doing this kind of little work, just 5 minutes work, then where are we? Come on, anyone done that? How many bankers still on guys here? How many People's Bank? How many, I think NSB or commercial, HNB, Sampath? No one knows their cost income ratios, at least 2021 or 2020, 2019. Hello. 2020, Chamali, yes, 2020 BOC 37. Okay, good try. Superb. Anyone, People's Bank? People's Bank? NSB? So your homework was that. Homework was to check your banks. So we have only one person giving me the answer. Anyone has a different answer for Bank of Ceylon? Come on, guys. This won't do any good. So if you don't listen to me or don't take the things that we discussed in the class, last week I couldn't participate to the class. I get things last week. The videos were not. Excuses. Okay, if we are excused if we have not gone through 2021 BOC 32. Very good. Let's see. At least some serious students. Thank you very much. BOC. Anyone from People's Bank? That is BOC. I got answers. Roshani Veerasingh, yes, coming in. Hello. Yes. Quickly, guys. So sad, very sad to hear or to see that you have not done any homework. So let me give. I think I did go through some reports. Can you all see these cost to income ratios? This actually I got from Kpmg. This you have information up to 2020. Cost income ratios of banks according to Kpmg analysis. So someone said, let's see, 2020 BOC 25. Yeah, this 2020 actually, where the comparison of 2019 and 2020. So 25, 25, 25, 25, 35, 40, something like, okay. If you do this, 5. Okay, somewhere there, 30 plus. Definitely 37 should be correct, yes. Yeah. People's Bank, at least for you all people who are not here or not here, people who are here but have not done any, tried anything, it is around 50. Around 50. So compared to if you compare both, take NSB also another state bank, NSB also around 50, but 2020 they have improved. Now BOC 1920 flat, People's Bank 1920 by 20 they have improved, but they are behind BOC. NSB had made a good progress. They have been about 50 in 2019, but been able to reduce it to around 40. Around 40, I think, yes, by 2020. So let's get 2021. They may have improved. So in terms of cost income, what is more? Which bank is more productive? BOC. So People's Bank had to do a lot to be more efficient, and they had to. So at least they have to benchmark maybe with BOC to reduce overheads or increase revenue in order to become this. This cost income ratio is dependent on many things. It can be due to bad loans, impairment, and there are many reasons. This is the final outcome. Right? Let's see. So in terms of interest income, 2020, right? BOC interest income has been the highest. It has been for 2019. It has been 230 or 220 billion. People's Bank, it had been around 175 or so, in that range. And net interest income also, Bank of Ceylon is about 75 billion. You know what is net interest income? Is it's a net actually, the average lending cost or lending rate minus average funding cost. And net interest margin, this is what I said, to maintain, it's a percentage actually, it's a percentage. So BOC NIM is around 3, it has gone down below 3 next or to 2020, and People's Bank the same level, but they have improved their NIM in 2020 than BOC. Like that, you can this kind of information available in the internet. You can log on to Google and search this kind of information, freely available for your own. So loans and advances, again, BOC as 2019, 1.6 trillion, gone up to 2020 to 2,000 billion, say about 2.1 trillion, and so on. Right. These are the, I said that day, if you take Bank of Ceylon and People's Bank together, they have maybe about 60% of the total industry they own, but more than 50% of the industry in terms of assets. BOC is almost now into asset last year, not last year, year before last, nearly 3 trillion, sorry, rather. So total is 12.8 trillion. Out of that, 2.9, 5.1. 5.1. Yeah, about 50%. Little less than 50% is accounted for by, in terms of assets. $29, yeah, 5.2, yes, 5.2, say 13. Yeah, around 50% is owned by 2 state banks. Two state banks, Bank of Ceylon and People's Bank. Right, interesting. So let's get back to the discussion. So then I went and discussed with you all competitive strategies, again by Michael Porter, and we discussed about the competitive advantage and how Porter said companies can achieve competitive advantage using his competitive theories. We call them generic theories also, right? So what are the three generic theories of Michael Porter? Okay, guys, just give the name of the theory. It talk about three theories broadly. To achieve competitive advantage, he said companies can have option of one among the three. What are these three options? And give me the names according to Michael Porter. These are called generic theories of competitive advantage of Michael Porter. Quickly, the companies can use one of these options to achieve competitive advantage. He said each option has several benefits, and according to the resources of the organization and the capabilities, they can select one of the options and achieve better results or achieve competitive edge over the industry players. So what are these three competitive strategies? Exam question. Quickly, come on, guys. Hello? I'm refreshing what was done last week, because without refreshing the things that was done last week, no point of going further. You'll keep just listening to me and that's all. I want you to understand what is discussed in the class and keep proceeding with some understanding. Come on, guys. Let's do this. Come on. What are the three theories of or three options of Michael Porter in relation to generic theories of competitive advantage? It's in the dude. Give one at least. Each one. What are the competitive theories? According to Michael Porter, he talked about three options to achieve competitive advantage. Hello. Cost leadership, yes. Dilani, thank you. Others are sleeping, I hear. Cost leadership is one option according to Porter to achieve. I mean, I don't know why you are taking so long to give these answers. These are very simple, direct answers. It's just from the tute. He said there are three ways to achieve competitive advantage. Cost leadership. If you are a big player, you have large amount of resources. For example, Bank of Ceylon, People's Bank can be cost leaders because their size. Because of their size, Michael Porter said these large companies can have the benefit of economies of scale. What do you mean by economies of scale? It is because of your size, you are able to demand from the suppliers. Yes. Come on. Ladies and gentlemen, please. I'm feeling bored. So somebody came up with cost leadership. Okay, that's good. There are two other options. My God, these are very, very easy questions. Differentiate and market segmentation. I did talk about the market segmentation. Yes. Okay. Differentiate, right? Differentiation. Differentiation, of course, to do differentiation, you have to do market segmentation. That's correct. So differentiation is another one. Differentiation is providing unique products to different market segments. For example, take in Sri Lankan context, take take Fonterra milk powder. They have milk powder for the full cream for general public, and they have full cream for pregnant women like and mom. They have milk powder for children, Anchor 1 plus, 2 plus, 3 plus, like that. They have malted stuff. They have low price range called Ratti by Fonterra. So differentiation is where you segment the market, yes, and understand unique requirements of or different requirements of each segment, and design products that appeal to those segments better and better. That way you can easily grab the confidence and the brand loyalty from those respective segments, because you are offering unique products to selected segments. Because maybe medium-sized company, for a medium-sized company, Michael Porter said, this can be very useful because you don't have large resources like major players. Say take the Sri Lankan banking industry. Say some banks medium size. Take like banks like maybe Pan Asia, Nations Trust Bank. So those banks can use this differentiation option and be very good in certain segments. I think which they are doing at the moment. You get me? So differentiation is used for a medium-sized organizations who don't have large amount of resources like industry leaders. With limited, moderate amount of resources and capabilities, they can use the differentiation approach or the option to achieve the competitive advantage for their business. Okay. So what is the last one? Good. Cost leadership, differentiation, and what's the last one? Broad market. Yeah, broad market. Broad market is what? Not the broad market. Broad market is one variable that you are looking at. Broad market, narrow market. Broad focus, narrow focus. Right? I said three. Very clearly, there are three options. Cost leadership, differentiation, very simple. Right? Come on, guys. There are 30 people. At least, yes, 30 people listening to me. Out of 30, at least one should know the answer. Hello? Come on, come on. I'm feeling sleepy. Cost leadership, differentiation. Hello. Cost leadership, differentiation. The final one. I am not going to give you an answer because it is there on the tube. You'll be able to pick the answer and at least respond to me. If I'm not going to give me the answer, I'm going to stop the class for a while. Take a break. At least after the break, give me the answer. Okay, we'll take a break now. 3-5. We'll meet you. We'll take about 20 minutes. 15-25. Is that okay? Yes or no? First focus. Yes. Focus. Yes. Yes. Okay, at least. So it's cost leadership, differentiation, and focus. Focus can be divided into two: post focus and differentiation focus. I gave you answers. So remember three options according to Michael Porter, three options to achieve competitive advantage according to Michael Porter in his generic theories model. He said you can be cost leaders or you can be differentiators or use focus approach. Focus approach is where he said ideal for smaller players or those who want to employ lesser number of resources in a particular country. Take an example of Standard Chartered Bank, Citibank, or HSBC. In Sri Lanka, they use focus approach. They don't work in a broader market. They operate in a narrow market. They operate in a niche. So they focus on only the multinational companies. So maybe high net worth individual. One or two attractive segments they are interested in. They are not talking of general bankable population in Sri Lanka. So they are using a focus. Not that they are small, but in Sri Lanka, they don't want to kind of employ a large amount of resources. So they are selected to operate in a niche market as a niche player in Sri Lanka. Of course, HSBC is major player in some countries. Maybe they are cost leaders, but in Sri Lanka, their operation is more of a niche operation. Standard Chartered, Citibank, all are selected very limited number of segments, maybe one or two, which include multinational companies, their trade finance business, their exchange business, or their dealing operations, treasury operations, or syndications, or then maybe little bit of high net worth clients. So one or two, three maximum segments that they are interested in. Okay, you understand now. So according to Michael Porter, the companies can have very clearly either a cost leadership approach or differentiation approach, or use the focus approach. It can be cost based focus or differentiation based focus. Right. So let's stop for a while now. It's 3:10, and we will take 20 minutes and meet at 3:30. Okay.
Yes, sir.
Hello, guys. Yeah, thank you. Right. Okay. Now you're aware of the generic theories, three options by Michael Porter: cost leadership, differentiation, and focus. Focus, I said, focus can be cost focus or differentiation focus. Cost focus is where you're trying to focus on a sorry, trying to operate in a smaller market, but but you're you're trying to be the cost provide the cost advantage to the customer, and your products become cheap, and you operate in a niche market. And differentiation focus is where you have some superior products, but you still uh, operate in few, one or two smaller markets. So that's the difference. This is cost focus or differentiation focus. Both options are ideal for a smaller company which have limited capabilities and resources, right? And then you but I told you about another two gentlemen called Trichi and VSMA, right? And they brought in another three options, right? Another three options similar to options proposed by Michael Porter under generic theories of competitive advantage. These Trichi and VSMA also went and proposed three options that companies can use to achieve competitive advantage through that to be best in that industry. So, so what are the three options proposed by Trichi and VSMA for companies to achieve competitive advantage over the competition, over the other industry players? Come on, you should be able to give. There are three different options which are maybe little similar to the generic theory options of Michael Porter. So what are these three? Quickly, guys, these are simple questions and you should know these three options of Trichi and VSMA. That he actually he wrote a book on these three theories. The name of the book was Value Disciplines. Name of the book was Value Disciplines. He said these are basic competitive strategies for companies to achieve competitive advantage over the rivals. Quickly, guys. Hello. Customer intimacy. Superb. That is one. What is customer intimacy? Being very close to the customer. Very close to the customer. That means more and more customer focused and customer centric. Yes. Superb. The second one is operational excellence. You have a very, very sophisticated, efficient operational processes. And the final one is, yes, product leadership. There you have superior products. Some examples I give you is, if you take Gillette, or Samsung, right, are superior products. They have they are unique. They have very high brand loyalty, right? And take Sony, they have the product leadership, right? And right? And what's the example of operationally excellent companies? In Sri Lanka, you have any idea? Now we discuss companies like Walmart or Tesco in UK. You know Tesco, you heard of? The largest supermarket chain in UK. Walmart is the largest supermarket chain in US. They have more than 8,000, I think 9,000 supermarket outlets in the US itself. Can imagine the size. So big. They are actually Walmart is the largest company in terms of turnover in the world. Billions and billions of dollars income they make annually. Largest corporate in the world, Walmart. But their operational processes are very, very efficient. That has helped them to become or get achieve the market leadership to a great extent, because they have that cost advantage. According to, as Porter said, when you are really big, you can easily demand your suppliers. You can set terms and conditions with suppliers. Now, when Walmart buys from a supplier of, imagine supplier, so Walmart is selling not only the provisions and retail FMCG, they sell electronics, they sell text, the ready-made garments, they sell shoes, like departmental stores they have, right? In addition to retail day-to-day FMCG product range, right? And what happens is when they buy large amount of stocks. Say, for example, when they buy a television, they buy millions of television on one shipment. Say, for example, they order Sony 2 million televisions in one order. Imagine how much power they have. They can dictate terms to Sony or Samsung. Okay, we will buy you 2 million worth, 2 million units of television, and we at this price. So they can demand prices from, so they can easily become cost leader because they are huge. They can dictate terms to the suppliers. You get my point? So that's the advantage of having that large or size advantage and the economies of scale advantage, right? So customer intimacy is something that I know in Sri Lanka you can, to some extent, you can um, relate to, say, food city. To some extent, they achieve the competitive advantage through the market leadership. How? Because they also, in Sri Lankan context, they are fairly big. They can dictate terms to suppliers. Like farmers, they can have a buyback order system so that they can dictate their terms. Because farmers, they have to sell their produce anyway. So Food City or Cargills will go and have some agreements with them. Okay, you sell us these items during this period at this price. We will buy because of the volume involved. Anyone will sell to Cargills because they have a huge market there. Because Cargills is the big buyer, not a small buyer. So that, because that advantage, Cargills can sell their prices lower than the other retailers because they buy at low prices, and they can sell also keeping that, still they keep their margin but still at a fairly low price. You understand that? So that's the advantage. And so you can also look at Cargill's as a market leader, and also they have the operational excellent processes, operationally excellent processes, because they have to have the supply chain all automated, because for a day millions of worth products are purchased, so many items, so much value. So they had to definitely be operationally excellent, and they should have very good systems to support their supply chain. Otherwise, the costing of those foods and other items will be very difficult. And so they have spent millions of millions to upgrade their supply chain process, and introduction of many IT solutions to make the process efficient. So gradually they have become operationally also very, very efficient. Okay, then customer intimacy. Now tell me a company in Sri Lanka, in your view, you may have your own experience. You think fairly, maybe not only a bank, anything, even a bank or any other organization that you think which are very customer intimate or customer centric. For me, I have one or two companies which are fairly customer centric, uh, but I like to get your answers also. Name according to, maybe it's you can argue, but what companies you assume as more customer intimate, or which are more close to customer in Sri Lanka. Can you guess? Can you give us at least one or two names of corporates or organizations that maybe in your experience that can be rated as or can be named as customer intimate organizations? Okay. Because this is a subjective thing anyway. So you must have a very customer, to become a customer intimate company, you have to become very much customer focused, and you must have the systems to support, or we should have customer friendly systems, customer friendly processes, customer friendly procedures. Otherwise, customer won't feel that whilst you have the human touch, definitely you have to have the human touch. At the same time, you must make the customer feel very comfortable, very relaxing. That is how you make yourself more customer intimate. So technically, as well as and physically and emotionally, you make sure that you are very close to the customer, and customer is the number one priority. Do you have any company that in your mind which are maybe in your experience? Quickly, guys, can you name? I like to have a discussion with you. You think we have Damro? Dialogue, yes. Dialogue. Okay. I think I don't know about Dialogue, but Damro, I also feel I have worked with them to some extent. Yes, they are fairly customer centric. Dialogue also maybe, but Dialogue is more of a, in Sri Lanka. Okay, they are very good in their customer service. There won't be, because according to this Trichy and BSMR, you have to be in good in all, but in one area you can excel. No, Dialogue, the advantage is Dialogue have superior offers, superior products. So if you take their uh, uh, what do you call mobile data dialogue, because they have very strong network and they have their mobile Wi-Fi, they have fixed Wi-Fi, home base. So they are doing well because of they are good in customer service, as you said, and also they have that product leadership, right? Product leadership, because they have, compared to their competitors like SLT Telecom. Now I have my own experience. I use as my my home. I have a dialogue router and SLT Mobitel router. I have both. I'm using in combination. Well, I have FiberTech line data Wi-Fi through SLT and dialogue. But if you look at in terms of convenience and the friendliness, dialogue is much better, superior than SLT. SLT being huge, but still dialogue comes first. For me, I agree with you. Dialogue as that, and also it's very easy to deal with dialogue fix data usage, because you can easily communicate with them through the dialogue app, my dialogue app, and you can request more data when you need, and you can pay your bills online easily through your my dialogue thing. I'm very, very convenient. Customer user friendliness is very good. Okay, the Ceylon Bank comparably more attention on senior citizen. I don't know that maybe your view for a Ceylon bank. Yes, justify. You must be able to justify. This customer intimacy also it can be experienced, but same time it is how you compare Ceylon Bank service with another bank. Ceylon Bank's interesting thing is Ceylon Bank came up with the logo or tagline called the bank with a heart. When you have a tagline like that, you need to be really humane, isn't it? So I hope they live up to that tagline. So definitely, Ceylon Bank has to not only be close to senior citizens, but also to everyone, because they are a bank with a heart. You get my point. So maybe you are right. So your experience, you're saying, yeah. But of course, other banks also have the senior citizen products, which are very competitive. But maybe yes, we can argue on that. But Ceylon has, because of their tagline, they are very, very, very responsible to live up to that standard. Because even their tagline, they have said they are bank with heart, so they have to be definitely be having more feeling on the customer and treat them as human beings. Yes, very good. Good response. Anybody else? I also like to learn from you like that. So good to know. I'll look at. I'll check on this Ceylon Bank senior citizen thing. I have friends there. Any other bank you think which are customer intimate, or any other organization like? Yeah, what you said is good. Damro, I agree with you. Dialogue also, I agree with you. Ceylon Bank, of course, I am yet to be convinced. I hope they deliver that. Anyone else? Come on, guys, be participative in this, because it's very, very important. Because you are adult students, you need to just listening to me is not going to take you anywhere. You have to discuss, argue, and share your views. Right? Give me two minutes. I'll take a call. Sorry, guys. Yes. So, any other ideas? Kavinda Rodrigo, yes, join. Rasika Jayalat, Rashika, sorry. Any views? Oh, that day, I think you said we have students from various banks, not only Bank of Ceylon, Papers Bank. What else? NSB you have? Anybody from NSB? Yes or no? Hello? Anybody from NSB? Can you hear me? NSB, no one? Hello? People's Bank? Anyone? Yes or no? I think that is the hour. You are scared to tell me, oh, right? BOC, anyone? Definitely that should be. Hello? Just say yes or no. BOC, yes. Roshini, yes. Thank you. You are not scared to say. Raise the hand. Madhu, yeah. Dinshibat, yeah. I move. Raise, yeah. Dinsha, yes. Open queue, yes, yes. Oh, yes. Very good. Chamali, yeah. People's Bank? People's Bank, anyone? People's Bank, anybody? People's Bank? You're scared to say you're from which bank? I don't ask questions, don't worry. Right? You're scared to say your bank? Pabasara, yes. Yeah. Yeah. Don't be scared to tell you're from that. Yeah, Dinusha. Good. Now, NSB, anybody? NSB? Quickly, guys, please. Thank you for responses of some people. NSB, anyone? Dinsha can lower your hand. Anyone from NSB? NSB, no? Scared? And anyone from HNB? Hello? You're taking so long to respond, my God. Anyone from Commercial Bank? Commercial? Yeah. Somebody raising hand, I don't know. Raising hand where Dhanuka Etiarachi commercial bank or HNB, I don't know. Maybe one of those banks. Ceylon Bank? Anyone? Hello? Guys, come on. Dhanuka Etiarachi commercial. Thank you, yes. Just tell your bank. Don't be scared to be saying your bank, my gosh. Hello? Right. Okay. You all are very slow in responding, my God. Marketers can't be like that, right? Remember. Okay. Then let's get to the next thing. You know, but anyway, we had a good discussion. Thank you. And let me come to now we have discuss as to how companies could achieve competitive advantage. So Porter said there are three options companies can take: cost leadership, differentiation, or the cost focus or differentiation focus. And then Trichi and Viesema said you can a little similar to Porter's theory, but he said there are you have to be operationally excellent, and or you can be customer intimate, or have the product leadership. So those are the ways to achieve competitive advantage. So in the industry, remember that there are things called your position, because although you had various options available, you can't use you can select option which are not in line with your resource and your capabilities. So it's a smaller company can't become a market leader because they don't have resources to become that, right? Unless you have a lot of capabilities, you cannot be a differentiated use differentiation approach, because you should be able to research, study various segments, and assess the requirements and design new products to appeal to different segments. So that requires a lot of capabilities and skills. So it's not easy, because but you must select an option which is sustainable and also which is most appropriate to your capabilities and your resource base. You understand? So that's something that's very important. Although there are a lot of strategies and options, you can't use everything. You must use the most appropriate one for your company or your organization. So in that you find there are some there are companies which are taking certain positions. They are called market positions or competitive positions the companies have in the market. One example is, so there are 3-4 positions companies maintain in the market. The first one is the market leader position. How can you become a market leader? Definitely you need to be a large organization, like I said, in Sri Lanka, maybe I said Food City can be a market leader, because they are the resource base, they have capabilities, and they have other advantages. The Bank of Ceylon is a huge People's Bank, huge. They have 25-30% of the industry. They account for that level of business volume. So they have enough resources because they are state owned, and so they can be market leader. So market leader is one position companies can take. So if you look at a lot of industries, there are market leaders. Now, if you take now automobile industry in Sri Lanka, there are no automobile uh, uh, genuine automobile companies. But say take food operation. The Keels is a major food player. There are biscuit manufacturers. Say Munchie is the market leader. Of course, Melbourne is also giving a good competition. And take telecom, who is the market leader. We don't know whether it's telecom or there's huge competition given by Dialog also. Food City and Keels, but still the Food City may be bigger and accounting for, but Keels is K-Super is giving a head-on competition. In Sri Lanka. Now, even say the tile industry with the market leader, definitely Royal Ceramic become the market leader because they are the market size, they are resources base, and their market share is much bigger. ACL, the market leader in the cable industry, right? So they have that so large corporates which are big in size and rich in skills and competencies can only become market leaders. You get the point. So, so how do they sustain? So what they do is they can expand the total demand because they are size and they can reach out to new areas, new users, discovering and promoting new product users, encouraging greater product usage. That's what they do now. Like we take even say in Sri Lanka, take Unilever, FMCG manufacturer, FMCG product manufacturer. So they can do all that. They can continue to expand the total demand because they have the resources to come up with new products or new usages and new users as well. Protecting market share because they can easily maintain their market share. When there's a weakness, they can always prevent and fix it, and they can keep promises because they are capable of providing that or keeping that promises because they have ways to do it. Then keep prices consistent with value, build and continue to build relationships, and continue to do the innovations, use innovation, and expand market share because because their size they can expand their the amount of you have seen how many if you take last 6 months how many new Food City outlets would have come in, would have started or launched. So everywhere you find very large space. This Food City and Keels are buying or renting as their new retail outlet. So they can expand the market share. So whenever they go, they grab new set of customers, and all small players, retailers in that area are losing business to Food City or Keels whenever they open a new outlet in the same locality. So that is the advantage of being a market leader. The size matters. Okay. Then who are the challenges? The next position is the challenges. Challenges are medium size, but they are rich in competencies. Right? Resource wise, they may be not as big as the leader, but they have maybe unique skills or skill set and unique competencies. So challenge the market leader. So they challenge the market leader, but it's a risky, but what's there some other gain out of it? Sustainable competitive advantage of the leader is key to success. So what happens if they challenge the leader and grab some market share from the leader? Challenge firms of the same size or smaller regional and local firms. So some medium-sized companies with a good skill set, they can challenge and even become market leader. You know what happened? Even Munchie is one example. You know, Munchie was a fairly smaller player compared to Melbourne about 10-15 years before. You know that the Melbourne was the household name for biscuit. Munchie was not that bigger, but you know, over the years Munchie kept challenging the market leader that time, and then they now become market because the Munchie was good in their competencies and skills. They came up with new products and new versions, kept using innovations, and so on. And you know, even some in the banking sector, you find that some banks like Ceylon Bank, Sampath Bank have been challenging the market leaders like Bank of Ceylon, People's Bank, HNB Commercial, who were giants in the industry, being challenged by Sampath and Ceylon to a great extent because they are more into challenging the market leader. So that is something you must understand. Right. Okay. So then, sorry. So they attack the market leader. Frontal attack. Frontal attack is head on, face to face. In say certain products, they will for example, again, if you come to Melbourne. So Melbourne cream cracker, you know, you remember Melbourne cream cracker was a household name, and then Munchie, I think, came up with some Munchie super cream or something, and then challenged it. It fought head on with Melbourne cream cracker. Now I think, if I am not wrong, Munchie super cream cracker is the number one, and so you know, so that's how they attack head on. Super cream. And how they did was they used all type of advertising and all type of improvements in the product, and finally were able to challenge the market leader even and gain a bigger market share. And market follower is the next. Following the market leader is maybe it's not like challenging the market leader, but merely following. They are not challenging or fighting head on with the market leader, but they learn from the market lead experience, copy or improve on the leader's offerings. Strong profitability does not mean being a carbon copy of the, that one advantage of being the follower is you silently keep copying the market leader and learning from the market leaders shortcomings. For example, market leader launch a product, right, and product may be not doing very well or failing due to some reasons. So what market followers will do is they will silently learn where the market leader has gone wrong and learn from that, and they start from that. So because of that, they can maintain low cost because market leader has done almost all the research and launch a product, but have some little refinements to be done, so that the market follower will quickly understand that where the market leader has gone wrong. They will come up with the product addressing those weak areas without any R&D, because they have copied everything from the good parts have been copied from the market leader. Only here and there little things have to be improved, and then they launch a product similar to maybe market leader, following the market leader, or little different product using the market leader's previous efforts. You understand? So that's also another good one, because when we don't have resources that much, and you don't have a lot of competencies and skills, and still you can do well by being very I would say very intelligently. The market followers copy the market leaders and learn from the market leaders, and so they don't repeat the same mistakes the market leaders will do. Okay, you understand? So we'll go to the next competitive position is the market niche. Market niche is where you surviving market niches means targeting subsegments. Good strategy for small firms with limited resources, earns high margins rather than high volume. Specialization is key. Customer, size, geographic, quality, price. So, the market niches are always the small firms with limited resources, but they at the same time they will operate on a broader, narrow market, target on few important segments, attractive segments, and do push their business in those sub-segments, and they don't have big resources, they don't have big competencies, but all limited, but still they can do business because they are operating in a narrow market, but they may be good in certain things, so that they can look after. They select only the segments that they can really do a good job. So it may be in terms of cost or in terms of differentiation, as we learn from the Porter's model. So so niches also operate in a in certain even in Sri Lanka you find there are some biscuit manufacturers, soap manufacturers. They are based in different geographical locations. They don't come to Colombo and compete with the market leaders, but they are good in southern area. Some people are good operative very much in northern area. They make some, and also there are some plastic, this PVC type product manufacturers, they don't come and compete with like Eslon or Anton, but they are in regional level. They are looking after smaller market, but doing still making a good profitability. So okay, so I hope you understand these competitive positions. So market leader and market follower, market challenger, follower, and the niche. So all positions can, with depending on your resources, depending on your capabilities and skill set, you select and to be in certain competitive positions that is most appropriate and most beneficial to your organization. I hope you agree and understand. So these things you can read further explaining the thing, right? Then we come to the other part of the, now we are, remember guys, we are still in this marketing audit, study of marketing audit, where we try to analyze the current situation. Where are we now is the still question we are digging into. Where are we now as an organization? Our competitors, how are we doing it in terms of our strategy, whether we have selected the right strategy. So those are the things that still we are discussing here. So marketing strategy audit, how clearly stated and realistic is the mission? Now every organization has a mission statement. I hope your banks also have mission statements. To what extent it is consistent and compatible with the corporate and marketing objectives? Mission state. What is mission statement? Mission statement is something that you carry out. Yeah, you're talking about your organization's activities, right? That you keep carrying on in order to achieve the organization's long-term vision. So vision is the end that you want to achieve. Mission is how you are going to do it. Mission is how you are going to do it. And the vision is your ultimate destination that you want to get to. Okay. So you are according to so vision and mission should align, because if your mission is not appropriate, you will not be able to achieve your or realize your vision. And your mission, what you do should be consistent with your corporate and marketing objectives. Say, for example, you want to become the number one in the say a private bank will have a vision to become the number one in, say, efficiency or productivity, or number one in customer service in the industry. So then how do you achieve that? To achieve that, you have to be having some set of strategies and action plan to get there over next few years. So that alignment or consistency has to be maintained. You want to achieve something, so to achieve that, you have to have your actions accordingly. There has to be a alignment of both sides. Do the corporate and marketing objectives provide clear guidelines for marketing planning and control? Are these objectives consistent with organization's position, capabilities, and opportunities? Are the objectives for each business unit clearly stated, realistic, and consistent with the overall marketing objectives? For example, you want to achieve another example. You want to achieve the product leadership in say housing sector, to become the number one player in the home loan market. Say example, you want to become number one player in the home loan market within next 2 years. So how do you get there? So you have to have a set of products. You have to have a set of good promotion or communication mechanism. You have to think of the pricing, how you do it, and your distribution mechanism, how you bring it to the customer, and whether your people are trained, are they skillful to get there, provide that level of service to the customer, or deliver that level of service to the customer, or your processes. The processes are really supporting your final objective to get to become number one in the housing or home loan market. So like that, these have been questioned. If there's no alignment or consistency during the audit process, you will have to change it or rectify it. Then your strategy, you have a lot of options as an organization to realize your or achieve your objectives. How clearly stated and appropriate is the marketing strategy, right? And is the strategy convincing? Has it been properly communicated? One mistake our organizations do is they, although they have a good strategy, is not properly communicated to the workforce or the staff. So the staff, because if the staff doesn't know what we should be doing and what our visions, missions, and our bigger objectives, how do they fulfill the organization's requirement? Right? Does the strategy take full count of the state of the economy, the stage reached on the product life cycle, or competitors' strategies? Is the basis for market segmentation appropriate? To what extent is the scope for developing and improving upon methods of segmentation? So we will get to those segmentation thing, because market segmentation has to be done properly, because you can't be serving the entire market all the time. So segmentation and the differentiation is needed. But as I said earlier, how many of you all are fully aware of your vision and mission in the bank and the corporate objectives? Now, if I ask you, say Bankers Loan, what is your vision and mission, and what are your objectives? So I might have some. I don't know. I have not updated this. Okay, not in this slide. I want you all to now, if you all are not you are not aware your vision and mission. Right? How can you deliver to that? One second. One second. Yeah. Now, if you get to this side, now to what extent it says consistent and capable corporate and marketing objective. That's okay. So then you come to do the corporate and marketing objectives provide clear guidelines for marketing planning and control? Are these objectives consistent with the organization position, capabilities, and opportunities? Are the objectives for each business unit clearly stated, realistic, and consistent with overall marketing? I hope you understand what he said there. Now, this is what I want to get to. How clearly stated in the appropriate, stated and appropriate in the marketing strategy? Is the strategy convincing? Has it been properly communicated? You know, so you should, as a member of a workforce, member of that staff, should clearly know the vision and mission and the bigger corporate objectives of your organization. Now, what you I am asking you to do this exercise next next week. Please log on to your website, right? Website, and you have the annual report of your bank. Can you do that for me next week? And write down or make a note of your vision, mission, and other maybe objectives or value set of values that it can be in different ways presented. Generally, it is given in the first few pages in the annual report. What are the organization's vision and mission, and what are the key objectives they want to achieve in the longer term, or type of things that they use as their value systems. So can you take down, or can you so I might ask you next week, have you gone through your vision and mission in the bank, and corporate objectives given in the annual report of the bank? So will you do that for me next time? So then we'll discuss. And then what I'm trying to tell you is, now this has to be known to everyone. Every single member of the organization should be knowing this, because then only they can actively participate, actively cooperate the organization to get to the final destination. Otherwise, different people will drag into different directions, and bank will not be able to achieve the desired vision and final vision, because they can't achieve the objectives, and they cannot finally achieve the long-term vision they want to realize. Okay. And how accurate are the profiles of each segment? Profiling is the details. Each segment with the market size, number of customers, their income levels are called profile, right? Profiles of each segment mean the details, basic information of the. Now, profile of a person is the name, age, the location, the person living, date of birth, the position, is known as the profile. Like in a segment also, the basic details of the segment. How well develop its positioning strategy for each segment. Does scope exist for repositioning in order to strengthen the competitive stance? Positioning strategy for each segment is, positioning strategy is um, the positioning is the picture that you frame in the minds of the customer in regard to your product. So, for example, now if I ask you how the Sony TV is remembered by you, Sony or Samsung TV is remembered by you because uh, you you uh, you believe because Sony or Samsung TVs have positioned in your mind as good product, durable, having good features, and maybe good value for money, and so on. So positioning is that. So we have to position our products in the minds of the customer. Remember, that is your positioning strategy. So how you do that is your strategy. So you have to make the customer uh, basically own a space in the customer's mind. Now, then only the customer can recall your brand when there's a need. Say, now if I ask you, when you want to buy a cellular phone, what comes to your mind is called top of mind recall. You remember that the first day we had a discussion, that particular brand has the top of mind recall. Top of mind recall means because you remember that that product has given you some good service, and you build some brand loyalty to that product. So when you have a loyalty, build a loyalty on a certain product because of its good offer, or good offering rather, because of the value it has given you, or you have. So it's a mental picture that is in your mind, that this product is good. So then you recall that name quickly, and that is the strength of your positioning. You understand? So some brands have positioned in our mind, or registered in our mind as good products or good solutions. It can be anything that you buy, maybe a shirt you buy, a dress you buy, shoe that you buy. So there are certain brands that are registered in your mind. That is positioning. The positioning is, remember, is something that you do with the customer's mind always. Because you know that when your positioning is stronger, customer will recall your name very quickly. Number one. So every product want to be number one, or register as number one in their customer, with their target customer's mind. If you can do that, then your positioning strategy is more stronger. I hope you are clear on that. All right. Or if your positioning is weaker, you may have to reposition or strengthen your positioning. But how do you do that? We'll discuss how to about positioning strategies. But remember, all your marketing activities that you do, basically the all piece or 7 P's will 7 P's are the tools that you use to position your product in the minds of the customer. So if you play around with your 7 P's strategically, and you be able to register your product in the minds of the customers, and your positioning become very strong, and you can achieve the total top of mind recall. Are the available resources sufficient and suitably allocated to the various elements of the marketing mix? The resource allocation, right? If there is scope for reallocating resources to achieve a greater degree of cost effectiveness, are these sufficient controls built into the, these things are good questions that you, I hope, understand to ask at the analysis stage of the strategy. The marketing functions, sorry. What are the product line objectives? The products, take out product line. How appropriate are these objectives? How regularly are the objectives reassessed? Is the current mix of products achieving the objectives? Which products should be deleted? What product modification should be made? If you take the bank, we have a lot of product lines. Product lines, we have commercial loan products, we have deposit products, we have housing loan products, we have business loans, we have personal loans, different product lines, and each product line and these have different objectives to achieve, and these will have to be reassessed. And sometimes you might find certain products are now stale, they are not moving at all well. Then what do? You may have to delete some products and you have to introduce some new, or you have to modify your existing products. What products should be added to the line? New product. How well managed is the product line? What are the product line's particular strengths and weaknesses? How does the product line compare with those of the organization's competitors? To what extent is the product line differentiated from those of the product? Here you mean the product line is you have you can have different product lines. Now take Unilever. They have different product lines. One product line is the soap, soap market, soap, Lux, Sunlight. That then they have toothpaste like Signal, SR, and things like that, right? And then they have another maybe like shampoos like Sunsilk, and there are different product lines, right? And detergents, and and so if you take soap line, it's one line, and they keep and they have certain objectives on each of the product lines, and they want to succeed in those, and they keep adding new products into this, and so they keep monitoring the product lines performance regularly. And like that in the bank also we can have, okay, now we have home loan product line, but maybe we don't have a sufficient number of offers that suit the customer requirements. There are gaps in the market that need to be filled with some new products or new modifications. This is what we are talking here, right? So that will help you to increase your performance or improve your performance. And Also, you keep on comparing your offer with the competition as well. Then only you can do better. A business portfolio is the collection of businesses and products that make up the company. Now, now if you take a bank, we have a business. We are a business portfolio. We have a collection of business and products that make us. Business portfolio planning involves two steps. So business portfolio will have to be anyway planned because we have different portfolios. We have, say, our commercial banking portfolio consists of many products and services. And as we discussed earlier, we have to continue to monitor these, analyze these business portfolios and take whatever corrective action that has to be taken to make our products more sustainable and more profitable, right? And one method to assess and monitor your product portfolios when you have different products or product divisions. One useful model is, which is widely known, is Bcg Matrix. Now, what is BCG? Boston Consultancy Group Matrix. What does it say? Now, some of your product lines or even products can be, let's say you have 50 products in the bank. You have new products, which are recent one, and some matured ones, some very old products, and some products which are failed, still you are keeping. These type of products you might have in your product range, product basket. So BCG will help. It's a model that help us to assess or analyze the current product basket and categorize them into various quadrants, you call it, or various sections, and thereafter tell you what has to be done to the products which are in each quadrant. So Boston Consultancy Group matrix talks about two variables here. One is the market share or relative market share of these products in the industry as against the competition, and whether the market is growing with regard to that product or that product category rather, right? Market growth rate is one variable. It has low market growth rate and high market growth rate. On the other side, you have relative market share. Relative market share is your product market share in relation to the competition or competitor products. So, for example, you have out of the total market, you have 10% or 15% or 20% or 30% or 80%. So during the BCG analysis, first you take all the products and classify them into different quadrants, and each quadrant is given a name, and how you classify is based on relative market share and the market growth rate of the particular product category. Say, take an example. Housing loan offer housing loan category products of the bank. Where do you classify in this? Is it in star category? Is in cash cow category? Is in question marks category or dogs category? Okay, now question. Now tell me your housing loan product category. Where do you place? Now you have maybe 3-4 housing loan products with different features. You all are bankers, right? I want answers. Where in a BCG matrix, where do you put housing loan products in which category? Is it stars or is it question marks? Is it dogs or is it cash cow? Answers, please. Who is coming in the first? So how do you select the market share and the market growth rate? Relative market share versus market growth rate. So where do you put? So you look at with the house. Okay. Dakshina says it's a star. So let's see. Let's argue. Yeah, different people may have different. Very good, but Dakshina, good. Thank you for your response. Quick one. It says it's a star product. Who? Anyone else? Where do you categorize it? You remember the categorization? Star, cash cow, question mark, dogs. Okay, I will to make you make it easy for you. If you are not heard of this model again, you know star products have a high relative market share and high market growth rate. Cash cows have high market share, but market growth rate is low, or is a more matured product. Star may be mostly the new products that are introduced recently, but catch up very well or caught up very well. And question marks are low in market share because the product is launched sometime before, but still it has not been able to build a good market share. But do you think the product has a demand? The market for that product is growing, right? The dogs are the products that are maybe stale already. They are not performing. Maybe failed products because profit is low, the market growth rate is also low, the market share also low. So I don't know whether to keep that product or not. So those are the 4 categories. High growth, high market share are stars, low market growth rate and high relative market share is cash cow. Question marks, low market or relative market share and high growth rate. And but remember, you can't do this just for sake of doing. You have to have some knowledge on the market as well, and internally you should know what is your market share as against the competition. Okay, let's get back to the answers now. So one gave answer as star. Lakshmi, yes, quickly. Lakshmi Kanaratna, I need your answer. Cash cow. Dinusha Buddhima. Thank you. We have another answer. Cash cow, star, cash cow. Yes. Cash cow. Cash cow. Lakshmi, yes. Only 4 people in the class. 23 answers. Cash cow, Wyoming. I hope you are not copying the others. Everyone saying cash cow. Cash cow. Rashani says cash cow. I need another 2 answers to proceed at least. Out of 23, I think about 10 have replied. Another 2, guys. Yes. I got more answer, more cash cows. So another two, quickly. Otherwise, I won't proceed. I have another 2 answers. Cash cow, Nalinda, thank you. Another one, quickly. Quickly, guys. Come on, come on. Give me some water to proceed quickly. No energy for me, my God. I'm also feeling sleepy. You must be sleeping, no? No answers. 23 people, only 12, 13 people answered. Hello? Hello, guys. Another one. One more. Star cash cow. Hello. What are others doing? Sleeping. Oh, Prashant, cash cow. You didn't answer earlier, I think. Right. Okay. Thank you. I think so. How? So good responses. Okay. Let's look at in a practical point of view. Now I said housing loan. Housing loan in the banking industry. Housing loan is not a new product. It has been a fairly introduced fairly long before, maybe at least 10 to 15 years before. So definitely the market growth rate can't be very high because market is not growing at a rate now, because product is a bit of mature, right? So, and but if you take your bank, relatively your market share is sizable, I believe. So in that context, cash cow be the right answer. But star, if you, I don't know, if you're a new bank, recently introduced housing line, you can categorize it as a star. But in my view, common the housing loan also not a new product for any bank today in Sri Lankan context. So more appropriate answer would be cash cow. Okay. Right. Then like that. So you have many questions, many products. You can argue in terms of relative market share and growth rate, and you plot. So some 5-6 products will come here, another set of products will come here, another set of products come here. Question marks products are the product that you are not sure again whether they can proceed, whether the product has to be stopped, or maybe you have to modify the product. There's no point of holding it, you think it has a growth demand, but it doesn't grow for you something. But definitely to be able to with some corrective action, you must convert your question marks, that is some of your question mark products, to stars, because it has a growth, and only thing you have to increase your market share by taking some appropriate actions. But then dogs, what will happen? Dogs are the product that you have tried, but it has not supported you in any way. The profit also, maybe some products people can argue definitely, but differently. Dogs, some products whether worth keeping it, but you call dogs because sometimes you keep some products because of you're emotionally attached to that product. You don't want to delete it also, but maybe you have some attachment to that product, and you, for sake of keeping, you want to keep it. So there may be some products like that which are not bringing you revenue, but they are just there, but you want to, emotionally you don't want to maybe it's a pet product like dog. You like that product, although it doesn't make you a good revenue, but you are keeping that as a pet product. So the future of the product is not very convincing, right? So further explanation to BCG, the simple corporate planning tool to assess the company's position in terms of its product range. Boston growth share matrix. So housing loans are fairly profitable because it has a low growth but high market share. Stars are under stiff competition from the competition. So what do? So final decision after you done the analysis, either you build some products, or some you hold, some you harvest, mean you convert to cash and get rid of it, and divest is deleting. So what are the products that you think you must build? Maybe mostly the star products to increase market share further, and even some question marks products can be converted to, I said, stars, right? And hold. What are the products that should, say, preserve the market share? Because you already have a good, although market growth is poor, low, you have to hold because it is bringing you high profits. Harvest. Increase short-term cash flow. Good for weak cash cows. Question marks. And harvest means that if you think long term is not going to help you, maybe weak cash cows, so question marks though. And divest, sell or liquidate, good for dogs and question mark. If so, either you can take addition, as I said, you keep it or divest it. Now come again. Now star products are ultimately becoming cash cows, because star products may be fairly the products which are in the growth stage, and in the life cycle, and eventually they will become cash cows. And some question marks, some products will go here, some products will come here. So products that are pushed to the stars can remain. Question mark product that goes to the dogs category can be divested, because no point of keeping the products further. You understand? So as I said, question marks, some are converted to stars. The cash cows come towards, sorry, the stars will come towards cash cows, and also some cash cows can become question marks eventually after some time, whether you need to keep it or hold it. So desired movement is this. So what you will do is, sorry, the cash, some money you use for cash, getting from cash cows, you can use to build question marks products, and also star products. There is Arosa, no, the dotted Arosa for desired movement. So question marks products will have to be converted to stars, stars to be converted to cash cows. But profit you generate from cash cows, you will use to push question marks to come to this side, and also you push cash cow product profits to star products to build star products further. Dogs are of no future. You divest and you build, collect whatever cash that you get from the sale of the dogs. I hope the grid is clear. Question marks to become stars, stars to become cash cows. Cash cow money will have to be used for question marks and to build question marks and stars. When I said the product life cycle, product life cycle, and product life cycle is this. Product life cycle is a product will be developed, it will be introduced, and it will grow over a period of time, mature and decline. Product life cycle is this. So remember this, like S-type curve. You develop, launch it, and it will grow and mature, decline. Now, if you combine this product life cycle curve and the BCG, now you can understand it better. Question marks products are usually in the introduction, because you don't know where it will move. Question marks products usually at the introduction stage. Star products are at the growth stage. Dogs are at the end of the product cycle, maybe decline stage. Cash cows are maturity. So you find that as the product is growing, you have a lot of question marks products here, and if they do well, it will become stars and be here. As they mature, they become cash cows. They will be here, and the sales are declining and falling. Then you have dogs here. So here you have combined the product life cycle and the BCG matrix. Then you find next thing is the in terms of price, what do you analyze? The pricing objectives and procedures. Okay, let's I think guys is time that we stop at this point. I'm also bit tired because today yeah, a few because at a stretch I've been talking to you, and it's more than 3 hours or 4 hours, almost 4 hours. And shall we stop at this point and proceed from this point to next week? Okay. So we'll stop at this point. And I have given you exercise. What are the exercises? Some homework. What are the homework? One is log on to your website, your bank website. Two things. One is you check on your cost income ratios and bring it next week. I'll be questioning it. The bank, I'm asking from all of you, everyone should be get ready with the answer, cost to income ratio of your bank, and plus your vision, mission, and objectives. That is also in the annual report in your website. I want you to know vision, mission, objectives, or values of your organization, in addition to cost to income ratio of your organization. Or shall we? Are we okay with that? And are we agreed on that? And that's it. Then thank you very much, and call it a day, guys. Thank you. Thank you, Nadisha. Okay, thank you. Thank you, Nishani, Jamali, Prashani, Madhubashini, Madhubashiniya, Gunarat. Thank you. Call it a day. Damin, thank you. Nalinda, thank you, thank you.